I'm Shay Russell for mining.com.au, and joining me today is Simon Wensley, the Managing Director for Metro Mining. Simon, it's a pleasure to have you back on. How are you?
Hello, Shay. Yeah, great to see you. Very well, thank you.
Let's kick off today's conversation with some of the business details. Now, the March quarter has just wrapped and you've put an announcement out to the market. Can you please give me a quick summary of what you've achieved in the first 3 months of the year?
Yes, thanks, Shay. Yes, just an announcement out this morning. It's a brief operational update for the quarter. We shipped 184,000 tons of product during the quarter. That doesn't seem like a lot, but in the past, we have shut down for 12 or 13 weeks, sometimes over this March quarter, because it is our wet season there. But as your viewers would mostly know, last year we implemented an expansion, and that was to take the capacity of our operations, or pretty much double the capacity from around 3.5 million tons to 7. But part of that expansion was also new equipment that was going to be more resilient to that wetter weather and the wind and the waves that we get from a transshipping point of view in that quarter. So 184,000 tons doesn't sound like a lot, but it's more than we've ever done in that quarter, and also it's a stepping stone, and clearly our strategy is to try to get as much as we can out of our operating year, and that means in our March quarter, it's traditionally been a cash flow negative quarter because of that wet season. So we have a strategic goal for next year, 2026 and beyond, to make March quarter cash positive. And so in my calculation, that probably only requires about 500 to 600,000 tons shipped. So we're sort of partially on the way there this year, and so we can now start to plan that in greater detail. The other aspect, whilst we are shut down, we obviously don't just sit around twiddling our thumbs. We go into a big maintenance program. So anything that requires maintenance, we try to cram into that period and make a virtue out of the necessity. And so this year we've spent over $7 million on maintenance program on elements that didn't get really touched in our expansion program. And these are sort of some of the older parts of the equipment that started to cause us some reliability issues as we were hitting those high notes at the back end of last year. So some of just having volumetric issues, for example, some chutes, as we were getting towards those 30,000 tons per day, some of those chutes had so much bauxite going through them that they just were jamming up. So both on the mine site and also on our transshipper, we've radically increased the size of some of the chutes that were causing us those problems. So also our sample station really wasn't designed for that kind of volume throughput, and was also causing us stoppages and issues. So we spent a bit of money to upgrade the way that we take our physical samples for our customers. So a whole bunch of things to try and increase the reliability and throughput for this year to give a nice sort of smooth ramp up and heading towards that sort of 6.5 to 7 million tons of our target.
It's certainly been a busy 3 months to start off the year, and no doubt that will lead to smoother operations at your end. Now, I wouldn't mind shifting today's conversation and looking at the macro a little bit. We've got some big tides happening underneath us right now. First and foremost, let's talk about the new US administration. Now, President Donald Trump has said that he's going to apply tariffs to aluminium from anywhere that comes in outside of the US. Does this impact Metro Mining?
Yeah, look, it's certainly causing a bit of uncertainty in the market, and I think as we've seen, more widely, not just with aluminium, but everything. But I mean, when you look at the aluminium value chain, there, firstly, in terms of the benefit in the US, the US, he applied tariffs before, of course, right? So last time, and that really didn't have a material, impact or positive impact on the US in terms of their ability to produce more aluminium. And I don't see that happening again. I mean, aluminium smelters require a lot of capital and also a lot of power. So, those are the sort of things that are still required. And the power situation in the US hasn't really gotten any better. So look, I don't see that, a multi-billion-dollar decision to build more smelting capacity. One, it's not quick to do, and two, I don't think it'll be economic even with sort of temporary tariffs, even longer term tariffs. So I think when you then look at that and say, well, look, there isn't an immediate or medium term change to the aluminium space, then the trade flows in alumina and bauxite, which of course the upstream suppliers into that value chain, are not likely to change a great deal. And of course, our target market is to a great extent China. They've reduced their exposure to the US since the last Trump administration. They do supply into Mexico to an extent, but the feedback I'm getting from my customers is they're not expecting a major change there. And so when it comes to bauxite, it really, the alumina that goes into that is still going to be made in the same places and supplying the same customers. So again, not a major change in those trade flows, and certainly the supply demand dynamics in bauxite really still overcome anything in that macro picture.
And finally, just to bring today's conversation home, I wouldn't mind touching on the bauxite price and the alumina price, because these are two different prices, even though they essentially come from the same type of ore. The alumina price has seen, a huge move higher, but the bauxite price hasn't. Tell me, how does this impact Metro, or is there no impact?
Yeah, so look, at the end of last year, the alumina price, this are our customers. So a lot of our customers who make alumina from the bauxite that we sell, trade that bauxite into the market. And at the end of last year, there was a very rapid spike in alumina prices, and that was caused by both demand and supply factors, as you would expect. Now, the demand factors are still there, but the supply side factors have actually mitigated quite quickly. And so there's been a fairly rapid correction in that alumina price. So, our customers are facing, that issue. But, and of course, bauxite, when the alumina price does spike, of course, that also allows, that pulls through the bauxite price at the same time. And so there has been, a reduction in the bauxite price following that. But interestingly, the reduction in the bauxite price has not been to the same extent as the alumina price. So when we look at, I guess, the relativities, if you take out that very short-term spike and you look at the relativities of where the prices have landed for bauxite, they are still net significantly higher than where they were at the end of last year. So there was a spike in the middle, but where they've sort of settled is that they're still roughly, 20 to 30% higher than where they were last year. So of course, that's our target market. We're going after that, and we've just agreed prices for the next quarter, and we're going to benefit from that same, sort of increase, roughly, over 20% increase in our FOB netback prices for the coming Q2 of this year.
Listen, Simon, thank you so much for being here today. I look forward to speaking with you next time.
Great. Thanks for your time, Shay.